Welcome everyone to the Beginners Room we made today. It's Friday and we talk about trading with chart patterns today. If you have a question, whether you're joining from the YouTube or the XM website, whatever you're joining from, let me know in the chat box. Ask your questions, maybe relating to what we're looking at today or what you are trading at the moment, especially if you can see chart patterns that you think would be of advantage to what we are discussing in the class today, please let's know about it. So let's look at chart patterns. What do they mean? And how do we identify different chart patterns? Okay, so we're going to be looking at this today, and I'll show you how I trade with chart patterns. Shoulders, wedge pattern, double tops, double bottoms. So these are different reversal patterns here. We have some patterns that are neutral. We have patterns that can help us identify continuation of trend. So whichever pattern it is you're able to identify in your chart can go a long way in helping you have an idea where price is going to, or to help you to a large extent anticipate the direction of price. And this is important because as traders, what we are looking out for is how to trade in the market, how to find buy or sell ideas. So when you go open up your charts, you're looking at, okay, what is the trend? What's the setup? I want to do a buy or I want to do a sell. What do I look out for? Understanding the use of chart patterns or knowing how to identify different patterns on your chart can also be an added advantage. They can be of added advantage to helping you trade better. All right. So we are going to look at what chart patterns, what they represent, and then we start trying to identify, starting from continuation patterns. And that I think also includes you understanding what a trend is. So we may take it from there so that you would know when we start looking at the different patterns. All right. So now we have here what chart pattern means: a visual representation of the forces of demand and supply behind stock price movement, stock, forex, crypto, whatever you trade in the market. Okay, so when you look what's happening in the market, you're looking at the price like this. Okay, the price is moving down, but it seems to go to the upside now. When we talk about price charts or chart patterns, we are looking at what's the visual representation of how the price has been behaving, helping us to understand the level of supply and demand in the market. We have um, more demand than supply, and you know that prices move based on the forces of demand and supply in the market as well. Um, if you still remember your economics 101, you will know that we are taught that the higher the demand, the higher the price. The higher the supply, the lower the price, right? So when the demand is beginning to increase, we anticipate increase in price as well. Now, patterns can help you visually identify this increase in demand or reduction in demand and then subsequent increase in supply, which can tell that the price is likely going to be falling. So if I can have something on the chart that helps me to identify that we're going to have more demand than supply, or we're going to have lower demand, then that would also help me anticipate the direction of the market, because I already know that when the demand is increasing, the price is expected to increase. When it is falling, on the other hand, the price is also expected to start moving to the downside. Hello, Dele. Good to have you here. How are you doing today? Sorry, let me be sure that my microphone is closer. All right. So I was saying that the demand level, yeah, and supply can also, we can visually identify them based on the different chart. The patterns help traders identify if more buying or selling is happening, which can then help us make entry and exit decisions. And of course, that's what we are looking for, right? You come to the market, you're trying to see, okay, what's a good time to find or buy a sell? What's a good time for me to exit this trade I already have? Sometimes this pattern help you to know what a good time is to do this. When trading financial asset in the market, profit or losses are made out of price movement. So it is where price move toward that would help us to make profit in the market, or maybe sometimes resulting in losses. So now the question is, how do I know a good time to buy? How do I know a good time to sell? What can I see on the pattern? These chart patterns are formed based on the behavior of buyers and sellers in the market, and which is what we have been discussing, demand and supply. When there are more buyers, and so we are looking for what a clue to that, which will then help us to know when a good time is to find, buy, or sell. Prices would usually change, um, representing candlesticks. Price changes are usually represented using candlesticks, and after a series of time period, candlestick pattern form on um, telling the price action story of the underlying asset. So what are we talking about? When as the prices are moving, we are using, for instance, I use candlestick chart. Some people also like to use line charts to better identify the pattern. When you change from candlestick chart to line chart, sometimes you would start seeing that some people say that they see the pattern better. Let me try and do this. So go to naked chart first, and then let's change from candlestick chart to line chart. So some people have said that they see the chart better, the patterns better with the line chart, because with the line charts, I can see here we had a double top, right? So I can decide, okay, this one, the price falls lower than this area, I'll start looking for a buy. At this point, I had a drop to the downside, and then I have what looks like a double bottom but with a higher low. So that's like a V shape with a pullback. All right. So I am able to see all of that with the line. It's kind of reduces all of the noise with the candlestick. So that's why some people also feel that it's a good thing when they change to line chart like this, that they would see the pattern better. You may want to do that as well. There's like inverted head and shoulders here, and when the price began to move up, what happens? It continues all the way to the upside. When we got up here, it gives us like a big double top, and price moved down from there. So if line chart is what you prefer, if you also believe that you're going to see the patterns better on line charts, you may decide to do that. When the price gets to a level, then you know, okay, this is a good time for me to buy. This is a good time for me to sell. All right, so the patterns would show. For me, I use just the candlestick, and I'm still able to see whatever I'm going to see from normal line chart. What I would have seen from normal line chart, I'll still see them when I use my um, candlestick pattern. If I just remain with the candlestick patterns, I still see what I'm supposed to see if I am using the line chart. So this is quite important, and we want to take note of that. They would help in to a large extent in identifying what the patterns are doing. Okay. So we have different kind of pattern. We have reversal patterns. We have continuation patterns. We also have some patterns that are neutral patterns. Pattern form, they can break in any direction. They are neutral. Whatever direction they break is where we will be trading them. So neutral patterns, we want to know those ones too, but our focus is mainly going to be on we're going to be focusing mainly on a reversal and continuation pattern. We have Hobedi Matayo from the YouTube. Thank you for tuning in with us. How are you doing today? Okay, so we're going to start with continuation pattern. We're going to be looking at some of the patterns that can identify continuation of trend for us. And when we talk about continuation patterns, we mean that they reveal that price is going to continue in the same direction. And when we say price continue in the direction, we mean that I want to first identify the trend. All right. So I identify a trend, say that when we were in an uptrend like this, okay, I can already see that we have higher highs, higher lows were forming. Now, say that I am somewhere here. Where's my pencil? So I'm somewhere here now, and I'm seeing that the price is making this kind of move, so they can serve as continuation pattern for me. Let's show you. So the price begin to move like this, more like a range, a consolidation, which kind of still tilts to the downside somehow. So we are having like lower lows trying to form there. Even though this is initially an uptrend, I can identify that we have some higher highs, lows. We have higher highs and higher lows. This has now started to form in the form of like a range, but also tilting to the downside. That kind of pattern is called descending channel. And with a descending channel, what do you want? You place a trend line above and below. When the price breaks above, you continue to buy because already you've identified that this is an upward trending market. So now with an uptrending market already, you're looking to join the trend. You're looking to be part of the buyers, but you didn't join on time. So when the price begins to give you that opportunity by a breakout above this, you find a reason to join in and do a buy. So that's how you will identify when this is happening. Then at a point, the price got all the way up here and it forms a double top. A double top is a reversal pattern. So we had here continuation patterns showing that the trend is it's still moving upward, it's still in an uptrend. And then we get to a level of resistance and we see a double top form, which is a reversal pattern, and the price changes. So that means if I truly understand patterns, if I know how to identify pattern, it is possible for me to know um, to see a lot of idea or a lot of signals in the market based on the way that I have identified the patterns. Okay, so I can digest the chart better by being able to analyze the patterns. So if you're a technical analyst, I think it's a good thing for you to know how to identify patterns on the chart. It's not enough for me to just be moving around the chart and saying, okay, my gut tells me that this is going to be bullish now. Okay, we have a bullish candle, so I'm just going to do a buy. I should be able to know a good time to buy and a good time to sell based on the patterns that are forming. So we have reversal pattern. What is reversal pattern telling me? That the trend is moving away from the initial direction into another direction. So if we have been in an uptrend, then I see a double top forming or head and shoulder pattern forming. I know already that because these are reversal pattern, I need to now start anticipating that we might move from that uptrend into a downtrend. So if I do have a trade already, that is a buy, I'm buying based on the trend initially, the uptrend. I might start preparing to change my ideas and move away from buying, maybe even exit the buy trades that I have and start looking to doing a sell. All right. So we're going to start, we will look at we'll talk about some continuation patterns, then we will start looking at the trend for the different instruments we want to trade. You may also tell us whatever um, instrument you want us to analyze. If you want us to analyze um, a currency pair for you, a commodity pair, you want us to identify maybe from crypto stock, just mention it. We would analyze together using the chart patterns and we'll talk about them. We'll see how we can use them to find trade idea. Dele, he said chaff. Okay, there is a V shape below your example. Yes, so there is like you're talking about the current page, right? If you're talking about current page, we have yes, what looks like a V pattern